Nigeria reaffirmed its strong presence in Africa's tech ecosystem as it raised over $400 million in funding in 2024, accounting for 70% of West Africa's $587 million total. Two major deals, Move and MoneyPoint, each securing $110 million, were the main transactions as Nigeria continued to be a key player in Africa's Big Four investment markets, alongside Kenya, Egypt, and South Africa, which collectively accounted for 84% of the continent's total funding. Transport, energy, agriculture, and fintech were the key sectors that attracted investor interest. Hello, welcome to Global Business Insights, where we analyze the main business stories. Nigeria's Seplat Energy PLC announced results for the full year ended 31 December 2024 with a 1.65 trillion naira revenue, about 137% increase over 696.87 billion naira earned a year earlier. The 2024 financial year performance was boosted by the acquisition of Mobile Producing Nigeria Limited, renamed Seplat Energy Producing Nigeria. Operating profit also rose to 647.9 billion naira from 163.7 billion naira year on year, whilst profit before tax surged to 561.4 billion naira from 125.5 billion naira in 2023. Still in Nigeria, UBA announced 766.5 billion naira profit in 2024, also an all-time high and up 26%. Net interest income reported in 2024 was 1.5 trillion naira, and electronic banking posted income of 236 billion naira. BYD, that's the Chinese electric car giant, annual revenue topped $100 billion for the first time in 2024, driven by strong demand for its plug-in hybrid models. Net income rose 34% year on year. The firm exported over 400,000 vehicles last year and is building factories in Europe and South America. Its shares have risen by 50% so far in 2025, outpacing Tesla, an American competitor. Wall Street pushed higher while the FTSE 100 and European stocks reversed earlier gains amid optimism that forthcoming tariffs from the US will be more measured than previously suggested. Copper prices rose as traders digested signs that US President Donald Trump's tariffs will be more targeted than anticipated. Gold also declined, with US bond yields pushing higher. In the US, S&P Global's flash US Composite PMI Output Index, which tracks the manufacturing and services sectors, increased to 53.5 this month from 51.6 in February. Rising PMI is not foretelling a recession, even though sentiment remains very subdued due to uncertainties associated with tariffs, especially in the manufacturing sector. No surprises, S&P Global also showed that manufacturing activity in the US deteriorated sharply, as depicted by the March PMI data dipping from 52.7 to 49.8. That's below estimates for a 51.7 expansion. But the services PMI expanded from 51.0 to 54.3 for the same period. That's in the US, beating estimates. Commenting on the data, S&P chief economist Chris Williamson said a welcome upturn in service sector activity in March has helped propel stronger economic growth at the end of the first quarter. However, the survey data are indicative of the economy growing at an annualized 1.9% rate in March and just 1.5% over the quarter as a whole, pointing to a slowing of GDP growth compared to the end of 2024. And in the United Kingdom, flash PMIs were also mixed, with services expanding but manufacturing contracting, again due to worries about tariffs. UK Manufacturing Purchasing Managers Index unexpectedly dropped to 44.6 in March from 46.9 in February, while the Services Business Activity Index jumped to 53.2 in March versus February's 51, and also above market expectations of 51.2. Traders in the UK, however, are focused on the Chancellor of Exchequer, Rachel Reeves' spring budget statement. I think that comes tomorrow, and the release of consumer price index figures also out tomorrow. Meanwhile, at a speech at the University of Leicester, Bank of England Governor Andrew Bailey said yesterday that artificial intelligence had the potential to be a game changer for Britain and the global economy, just as electricity was around the start of the 20th century. The governor said prevalence of technologies that were transformative, like AI, were lowering costs and making innovation easier, and thus would boost productivity. The share price of a DNA testing company, 23andMe, plunged 60% a day after it filed for bankruptcy, and CEO and co-founder Anne Wojcicki resigned. At its peak, 23andMe was worth $6 billion. Sales had declined after a breach saw theft of 7 million customers' data in 2023. Yesterday, the company was worth just about $19.5 million. Crude oil futures moved higher after Trump said the U.S. will impose secondary tariffs of 25% on imports from countries that buy oil and gas from Venezuela. Earlier this month, Chevron was given until April the 3rd to wind down operations in the South American country. The U.S. administration later extended that situation until May 27. That's for the wind down of Chevron's license, granted since 2022 to operate in Venezuela and export its oil. Chevron is only permitted to export that oil to the United States. The U.S. says Venezuela is sending violent criminals to the U.S. under false pretenses. Countries like Spain, Italy, Cuba, and India are other consumers of Venezuelan oil, as U.S. imports will be ending this month. Also on oil, U.S. jet fuel imports are set to hit a 2-year high in March after Nigeria's Dangote refinery pushed barrels to North America, which should lower prices of the aviation fuel in the peak summer travel season. The shipments by the 650,000 barrels per day Dangote refinery, Africa's largest, highlight its potential to reshape global fuel trading dynamics by creating a new swing supplier in the Atlantic basin. The jet fuel shipments to the United States could challenge domestic producers' economics in the largest fuel-consuming nation, that's the United States. The International Monetary Fund said on Monday that talks on a new program for Senegal could not go ahead until the government addressed the misreporting of key economic data under the previous government. The IMF suspended its existing $1.8 billion credit facility to Senegal pending a review of state finances, which confirmed last month that the debt and budget deficit were much wider than former President Macky Sall's administration had reported. Finance Minister Sheikh Diba said Senegal was hoping for a new IMF program by June. IMF Mission Chief Edward Gemayel said it was also too early to make that call, also when asked when Senegal was going to get a deal and if Senegal was heading for a credit event such as a debt restructuring, rescheduling, or default. How can countries like Nigeria benefit from what looks like unending uncertainty roiling larger developed economies. The Nigerian naira is among top performing currencies, rising over 7% against the dollar since the US election. Yields of over 20% to 25% have also triggered a rally in the local bond market following the massive devaluation of the naira. So-called idiosyncratic trades or specific bets on countries coming out of crisis or back on the investor radar as the deluge of very negative press on the US climate is forcing a recalibration of the investment mix, and many are looking for more resilient environments to diversify into, even as the US gets a bit more complicated. The advantage of not being highly integrated into global markets can be a strength for some commodity exporting frontier economies like Nigeria. Previous experience shows that in the event of a global recession or a massive tariff sell-off, the drag on markets in less integrated economies is less prominent than for, say, South Africa, which is intensely integrated. Only 2 years ago in Nigeria, you had a currency that was uninvestable. That has changed. Nigeria's stock market has also gained about 4% in dollar terms this year, better than many bigger markets. There has been a series of economic reforms that have really made a difference in the tradability of Nigeria from a local currency assets point of view. The imperative is to build on these gains, move beyond quick wins to the more difficult but enduring challenge of strengthening the key regulatory institutions, improving on security, cutting off fat and waste in governance, and stepping up the transformation of critical electricity and technology infrastructure. Technology startups and many new niches are seeing fast growth and interest and strong yields, and export-oriented manufacturing remains very vibrant, as well as the traditional recession-proof agricultural sectors, healthcare, pharmaceuticals, and so on. The good thing is that despite the many challenges plaguing frontier economies, and there are quite a few, there are still fewer options for getting decent yields for foreign investors wanting to be insulated from, for example, any trade drama, and who may also have a strong need to diversify out as the bubble in US exceptionalism seems to be bursting or at best looks vulnerable. Even if there is no recession in the US, the intense divisions and toxic narratives could still make it a stressful and, like I said, complicated market for many. Frontier markets have an opportunity, and one can only hope they will take it and not waste it. In the UK tomorrow, Chancellor Reeves will have the tough job of delivering what is expected to be a terse and unpleasant £15 billion repair job in her spring statement, with little room for fiscal goodies as she tells a tale of sluggish economic growth and rising borrowing costs forcing painful adjustment. Say what you like, investors are stampeding the US and holding their nose at all the negative press. Hyundai Steel was the latest to join the queue of investors as they unveiled a plan to invest $21 billion in the United States, starting with a $5.8 billion, 2.7 million tons plant in Louisiana. They're investing with Hyundai Motor Group. Also, individual retail investors have pumped almost $70 billion into US stocks this year, aggressively piling into the dip, even as professional money managers and investment giants are slashing their exposures given the uncertainty and volatility spooking sentiment. Asian shares today somewhat shaky, dragged by a slide in Chinese tech shares after a strong rally, also as investors weighed the prospect of milder reciprocal tariff action from the US. The US dollar also saw a 3-week high against the yen and euro after stronger than expected US composite PMI match data, also mitigating concerns over a potential US slowdown. Well, that's all on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami.